Hello, this is Andrew Westhof, owner and senior loan officer of Homes Mortgage Lending, and today I want to give you a brief overview of the pre-approval process for a home loan. I work with many first-time home buyers, and a lot of times there's some nervousness or a little bit of concern about starting the pre-approval process. So I want to hopefully alleviate much of that and give you some clarity on what the process actually looks like. I think some of the concern comes from getting a credit pull, so we'll talk about that, as well as there's some concern about whether or not you qualify, and what we're actually asking for, how much information we're going to require. And I can assure you that the actual process from your end on what we're going to ask for and what we need from you is not that intensive. So it's not a big deal to get pre-approved, and it can certainly be a mistake to wait to get pre-approved, especially if you've already started the home search, because you don't know what the pricing looks like on the homes you're looking for, whether you qualify for them. So there's a lot of reasons that getting the finances in order is going to make that home search a lot better, because you know where the price range needs to be, you know you qualify. Any issues that we've had in pre-approval, hopefully we can either get them figured out, or if you don't qualify, you certainly don't want to be looking for a home. So the information that different lenders need for pre-approval is going to be virtually the same, especially for conventional loans, FHA, VA, and USDA loans, because those loans are uniform on what the actual agencies that provide the funding to the lenders require. So all the information, for the most part, is going to be the same from lender to lender. It's just how we collect it is going to differ. So I'm going to go through Homes Mortgage Lending's pre-approval process. I'm licensed in the state of Michigan. I'm a local broker with great rates. So if you like how my pre-approval process goes and you're thinking about doing a pre-approval, starting the home search, please reach out to me. I'll put all my contact information in the video notes, and I'd be happy to help you. So without further ado, let's jump into it and go through what actually is involved with the pre-approval. The pre-approval process starts with an application. I'm going to go into detail on what that pre-approval application entails. But before I do, I want to let you know that if you're concerned about whether you qualify, or if you're just not ready to get pre-approved quite yet because you're going to be searching further down the road, or just have questions in general, we have a mortgage consultation here at Homes Mortgage Lending, where we can do the full pre-approval process minus the hard credit pull. We can do a soft credit pull instead, so we can get all of your information, give you the best advice possible, so that when it's time, you're as ready as possible to move forward with the pre-approval process. So I'll go into a little more detail on that in a later slide. So here's what the pre-approval application entails. We need to pull your credit, so we're going to ask for your name, your date of birth, your social security number, and your current address so we can get your credit pulled. This is where some of the biggest concern comes from clients, because you're worried about the credit pull impacting your credit score, or you're worried about multiple lenders pulling your credit and affecting the score because you're not sure who you're going to work with quite yet. So a couple of things here. The credit pull for a mortgage application or a mortgage pre-approval hits your score 5 points or less. So it's not a huge hit. And then also, you can have multiple mortgage lenders pull your credit within 30 days without it hurting your score more than the first credit pull. So if you have one lender pull your credit, from that day, 30 days past that, you can have as many mortgage lenders as you want pull your credit, and it's not going to ding your score again for a credit inquiry. This is important because you should certainly be shopping around for your mortgage. It's a big deal. It's one of the biggest, or if not the biggest, purchases you'll ever make. So you want to make sure you're getting the best rate. However, the interest rates they fluctuate every day with every single lender, and you lock your interest rate in once your offer is accepted on a home. So you don't know who's going to have the best deal for you until your offer is accepted. When you get your pre-approval, if you have multiple lenders pull your credit at that point, they're all going to have the information they need to run the numbers for you once your offer is accepted, so you can compare and contrast very easily at that point. So that's what I recommend. Any lenders that you're considering, have them all you pull your credit, do a pre-approval application with them. The added benefit is you're going to get to work with multiple lenders at the pre-approval stage, which is going to give you a better idea of who you like working with, so you can narrow that search on which lender you want to use. And then I'll provide in the video notes an article from Experian, which is one of the 3 credit bureaus, to verify this information, so you're not going, hey, where'd you grab that from? That both the multiple lenders can pull your credit within 30 days and the 5 points is the maximum hit that you'll see on your credit report. So then we're also going to take a look at your income. we need to know how much you make to do what's called a debt to income ratio, which is how we qualify you, how we see how much you're going to qualify for. So the debt to income ratio is the amount of income we can use to qualify you divided by your monthly obligations. I actually said that backwards. It's your monthly obligations divided by your income, plus a hypothetical number for what the payment will be in your price range. So we look at the minimum payments on your credit report for your car loans, student loans, credit cards, anything that's on there. We also look at anything that's not on your credit report that would include housing debt, not rent, because we know your rent's going to go away when you buy your home, but any other homes that you own, and then any spousal debt or any other federal debt that's not on the credit report that you're paying on a monthly basis. When we do look at income, we look at gross income. One of the big things that I have clients get concerned about with income is that they might have variable income, so they don't know how much is going to be able to be used. They might have bounced around with different jobs a bit. They might have an employment gap. You'd be really surprised how often I can qualify a client, even with job gaps, even with variable income, even with having a shorter job history. So don't let that deter you. Sure, you might find out that we need a little bit more time on the job, but more often than not, we don't. So let's find out for sure. And if we have a waiting period, hey, maybe we can get the credit score up higher, save more money in the meantime. And then we're going to ask for your asset information. Another hang up that a lot of times buyers have is they think they need 20% down, which is certainly not true. Most first-time home buyers do not put 20% down. The minimum on conventional loans is 3%, FHA is 3.5%, and then VA and USDA loans are 0% down. So you don't need as much down payment as you might think. And oftentimes you're worried about if you put less than 20% down, you have mortgage insurance. That's true, but it's oftentimes a lot less expensive than clients think. So it's good to take a look at that. And then we need enough to show on your asset statements that we have enough money for the down payment and closing costs. You can often use retirement accounts if you need to. We can get money from gifts from friends and family, and oftentimes we can ask the seller to pay some closing costs if we need to. So there's a lot of variables on this too. So don't let this deter you. Let's at least see where you're at if you aren't sure if you have enough saved up for the price range you're looking in. And then you're going to have documents requested from your lender at the pre-approval stage. Some lenders won't ask you for documents, but that's a huge red flag. I would not work with a lender that's not asking you for documents because they don't even really know if you qualify. And even if you were 100% accurate on the information you provided, do you really want to work with a lender that's not double checking those things? And there's things that we find on documents that can cause serious issues on your loan. So it's really good to catch those things up front. So like on the asset statements, we can see if there's some deposits that might be an issue. On the pay stubs, maybe there's some deductions that could cause an issue. So there's maybe we are, especially if we're using variable income, but just income in general, maybe we didn't calculate the income accurately. And heck, maybe you qualify for more than you thought you did. So the added benefit of uploading documents, even if you are very well qualified, is that when you have an offer put in, I like to call the listing agent and let them know how well qualified you are. I talk to your listing agent and ask them, I talk to your buyer's agent and ask them if they want me to call the listing agent. 95% of the time they say, yes, please contact them. And I get to tell them that I've reviewed your pay stubs, your bank statements, your W-2s, all of your financial documentation. That makes them feel really warm and fuzzy. And if you're in a competitive offer situation where there's a few similar offers, a lot of times that's the push that gets your offer accepted over others. So definitely provide your documentation and don't work with lenders that aren't asking for it. A pre-approval letter is good for 90 days. That's because the credit report's good for 120 days, and we need the credit report to be good through closing. And it takes about 30 days to close a loan. So after 90 days, you don't have the 30 days left to get the loan closed. Homes mortgage lending, our average is actually 21 days or less to get your loan closed. So we can push that a little bit sometimes, but just know that 90 days is how long the standard pre-approval letter is good for. Now, if your pre-approval letter is expiring or already expired, you don't automatically have to redo the pre-approval. we can let it expire if you're not seeing homes that you like right now. If you're not actively looking, there's no reason to have to, re-pull your credit right away. To redo the pre-approval, we already have your information, so we don't have to redo the whole application. All we have to do is re-pull your credit and get some updated documentation, updated pay stubs, updated bank statements. So it's not a big deal at all. And then your pre-approval amount is not set in stone. So a lot of times I'll have clients that, you want to get pre-approved for say $250,000. After looking for a while, you find out, well, really the homes we need to look at are $275,000. We can certainly update the pre-approval letter to that amount, assuming that you qualify for the $275,000. And what I like to do is update your pre-approval letter to the amount you're offering when you're making an offer. That gives you a little bit, helps your negotiation a bit, because the sellers don't know that you're qualified for $400,000 if you're offering on a home for $300,000 and you're offering a little bit below asking price. We don't want them to think, well, you're well qualified, you can offer full asking price, and why would we drop the price a little bit? So just a little negotiation tactic there. So there's a few things you should do before you start the pre-approval process. First and most importantly is you should do your budget. Mortgage lenders will let you go house poor. Our calculation on how much we can qualify you for a loan is very liberal. So you want to do your budget and find out what a good monthly payment would be for you and what's comfortable for out of pocket for your closing costs and down payment. So I won't go into a ton of detail. I am planning on making a video on some helpful things for doing a budget. So subscribe if you want to see that, because that should be coming out in the next month or two. You're also going to want to make sure that you have some money in your budget set aside for home maintenance and home repairs that may come up. Usually a good number is about 1% to 2% of the value of the home on a yearly basis. And then you want to get all of your questions answered. So many of my clients, before they actually do the pre-approval application, we will have a conversation over the phone and get any preliminary questions answered. If you aren't sure if you're ready to get pre-approved yet, it's certainly fine to talk to a mortgage lender up front and get those questions answered, go through your specific situation, and get some idea about how the loan process works. Any lender that's not willing to go through those things up front for you is probably a lender that you don't want to work with. And then that preliminary pre-approval with a soft credit pull that I mentioned at a bit ago, that's the mortgage consultation. If you're worried that you may not qualify, or you want to see where you're at today, but you're not looking to start the home search for 6 months, a year, 2 years, whatever the case might be, a ways out, and you want to get your questions answered and some general information, I strongly encourage you to do a preliminary pre-approval. It's the same as the normal pre-approval. It's the same application, but instead of doing the hard pull, we're going to do the soft pull. I'm lucky I have a credit vendor that I work with that on the soft pull, they give me a mortgage credit pull that doesn't affect your score. So I see the exact same credit report I would with a hard pull. There's some nuances where I need to have a hard pull to actually run your information through automated underwriting systems, which we need to get pre-approved, but everything else I can see. So we get 99.99% of the way there and know where you're at today without having any risk to you, and there's no cost to do that. So once you're pre-approved, I like to send you some hypothetical numbers on a fee worksheet. All right, so here's one from September 15th of 2022. So this is just a hypothetical estimates on closing costs, current interest rate on the price range that you're looking at with your credit score. So to give you a good ballpark idea of what your total out of pocket would look like and your monthly payment would look like based on your price range. So you can say, yep, that looks good, send the pre-approval, or no, I better lower that down a little bit, or what if I put a little less down, or whatever the case might be. I find that quite a few questions arise after you see this fee worksheet, so I want to make sure you get it so you can see what those financing terms look like in your price range. And then I give you a call to answer any questions and we go over things. A lot of my clients, we've already talked a bit before you started the pre-approval application, but I'm still going to call you after to make sure that the numbers look good, to see what other questions you might have. Then I send the pre-approval letter to both you and your realtor. I like to stay in contact with your realtor so that when you're making offers, I can contact the listing agents should they want me to. Sometimes there's other things like, hey, maybe you want to ask for some closing costs, so we can talk about how much you can ask for, things like that. And then so that I can run numbers for you while you're searching for the home. So during the home search, I encourage you to send me any addresses of homes that you're thinking about looking at. And that way I can run a fee worksheet that's very specific to that home. I'll pull the property taxes on that home and based on current interest rates. So you get a much more accurate fee worksheet than the hypothetical one I initially sent you. Property taxes are going to vary from municipality to municipality and even areas within it, and especially here in Michigan. And property taxes are going to increase once you purchase the home on almost every home that you look at in the state of Michigan, really most places in the country. So when I do those hypothetical numbers, I'm also going to give you an estimate on what the property taxes are going to go to, so you can prepare for what the payment will be after the taxes are reassessed. Make sure that's still comfortable in your budget. And then interest rates change daily. Mentioned this at the beginning, but every single day rates change. So if you think, hey, yeah, I've had Andrew price out a few scenarios, or my loan officer price out a few scenarios for me, and I'm pretty comfortable with where that payment's at, so I don't need to talk to him beforehand, but it's been a few weeks, I would encourage you to do it just to make sure that interest rates are still where you think they are. If they've gone up, that can certainly impact that payment, of course. And then throughout the home search, you're going to want to reach out to your lender if you have any questions at all. We go through a lot up front, and a lot of times questions will come up while you're looking for the home. And don't think that, okay, I'm only contacting my lender once I have an offer accepted at this point. Please contact us. Any lender that doesn't want to talk to you about things until your offer is accepted is a lender you probably want to avoid working with. But I like to answer your questions because it makes my life easier when you're well informed and you know what's going on. And I don't want you to feel in the dark any step of the way. And even if it's a repeat question, something we've already talked about, please reach out and ask again if you forgot or aren't exactly sure how that works. Because this is a very convoluted process with a lot of variables and a lot of rules and regulations that make it so that you're not going to be an expert on home financing or real estate when you're going through this process. So it's good to make sure you understand exactly how things work for your situation. Well, hopefully this has been helpful. Again, all my contact information is in the video notes. If you're in the state of Michigan, I would be happy to help. If you're not, but have some questions, please feel free to leave them in the comments. Please like the video so others can find it. I do some rate updates and some other informational videos about the home buying process. So if you'd like to see more information, please subscribe. And I hope you have a wonderful day. Thank you.